Tesla stock is currently up about 2.4%, having its best day since December 21st, 2023. In fact, we have actually not closed up over 1% in all of 2024 so far. We do have some breaking news to get into, and ultimately the reason why Tesla stock is up 2.5%, so let's get into it. We currently expect our capital expenditures to exceed $10 billion in 2024 and be between 8 to 10 billion in each of the following 2 fiscal years. So translation, Tesla is going to spend more money this year and less money in 2025 and less money in 2026, which ultimately means potentially more EPS for Tesla stock investors, thus, well, higher growth. Likely higher growth next year because if Tesla is spending more money this year, it's for production lines, the Model 2, and if they don't have to spend as much next year, that means a bulk of the investment is probably taking place this year, which short term will hurt numbers, but over the next 1 to 2 years, multiple years down the line, well, it won't be as much of a drag on Tesla's business. Honestly, I don't even think this is the craziest of news, but considering Tesla stock is so oversold, it is having a big impact on Tesla stock today. This is also having a positive effect on Tesla stock as well today. This article says Tesla's Cybertruck draws massive crowds in China as national tour begins. Some people are starting to speculate that maybe Tesla will do a smaller version of the Cybertruck to try and get it road legal in China. But the bottom line is, in a market that sold 8 million EVs last year, which is China, this kind of attention around Tesla, no matter if it's the Cybertruck or any other vehicle, is ultimately good news. Tesla, in their 10K report today, says historically we have been able to achieve sales without traditional advertising and at a relatively low marketing cost. We continue to monitor our public narrative and brand and tailor our marketing efforts accordingly, including through investments in customer education and advertising as necessary. In 2023, Tesla was not advertising basically at all via Google, very small number of ads. Now Tesla is running about 400 different ads, so it seems like they're getting some sort of success with advertising. A more targeted advertising campaign, I think, would also be good. Maybe even a Super Bowl commercial. I think the demographic that needs to hear about Tesla the most are probably the individuals that still have cable television. In fact, everyone that I know that still has cable TV and they don't have other subscription services, they still drive internal combustion engines. Maybe that's just a demographic that is acute to mine, but I think that's probably the narrative in most of the country. Let me know if you think Tesla should run a Super Bowl ad down below in the comment section. I will also point out some of the rally that we are seeing in Tesla stock today could be due in part because we get weekly insurance registration numbers coming out of China tomorrow morning. If people are expecting a good number, somewhere around 11 to 13,000, it would make sense why some people would position for that ahead of time, and you would potentially see Tesla stock up the day before. Since Tesla did not provide formal guidance, these weekly numbers are going to be even more important. If we get good numbers, the stock will perform good. If we get bad numbers, the stock will perform poorly as investors try to figure out what demand looks like and what Tesla numbers might ultimately come in at. But I do personally think tomorrow is going to be a good number, judging off of Tesla's almost 3% increase on the day today at the time of recording this video. I would judge that the markets think that as well. Even after this 3%, almost 3% rally we're seeing today, Tesla on the RSI is still sitting at 24.44, so there's potentially a lot more bounce left to go. You are still very oversold on Tesla stock. Tesla revealed today in their 10K report that as of December 31st, 2023, they have a total of 140,473 employees worldwide, up from 128,000 at the end of 2022. As Sawyer Merritt points out, Tesla has now filed its 10K report, which means Elon can now do a Tesla all-hands meeting and post it to X. This is what was said about the Cybertruck on CNBC today.
Hey Mike, well the Cybertruck is on on display at the Tesla store behind me. This weekend, the company started showcasing the futuristic new vehicle in 8 Chinese cities, including here in Beijing. Now, Tesla continues to be a fan favorite among EV drivers here, despite the fierce competition by local brands. One of the criticisms, though, of Tesla is that it doesn't refresh its models quickly enough, especially when compared to some of its Chinese rivals. Now, for this Cybertruck, Tesla has not officially announced that the Cybertruck would come here to China. In fact, Elon Musk has gone on record as to say that it's going to be difficult. And one of the issues has been the regulatory environment, especially around trucks. But one point that was really interesting and picked up upon by a lot of the fans is that the name of the Cybertruck in Chinese avoids the word truck. So that's seen as a way for Tesla perhaps to eventually launch the Cybertruck here. Guys?
Eunice, I wonder, aside from just sort of the names and what the implications are, I mean, in the U.S., of course, pickup trucks are the most popular type of vehicle. What's the case in China in terms of that ready kind of appetite for something that, you know, even vaguely looks like a pickup truck?
Right. Well, it's interesting because here you really can't get a pickup truck, or if you do, you're not able to drive into the city, like into some of the kind of more packed areas. So there are a lot of regulations around it. And that's why it's interesting that in the name, people love to see these big cars. They love driving them. That's what they were talking about, is that everyone's impressed by the size. They love the look. They were talking about how it looks like an armored vehicle. People loved it. But the regulations are such that they don't allow what would be considered a pickup truck into the kind of more packed parts of the city. So the fact that it was called an urban traveling wagon, maybe not so catchy, but maybe it could get you around some of the regulations.
So that's pretty interesting. Tesla isn't even calling the Cybertruck a truck in China, which could open up the door for Tesla to eventually launch the Cybertruck in China. It seems like this tour of the Cybertruck is probably a way for Tesla to obviously spread awareness about the Cybertruck, brand awareness about Tesla, but to also kind of feel how much excitement or enthusiasm there is around such a product. And from everything that we can see, different images, Cybertrucks in different cities, anywhere the Cybertruck goes, people are crowding around it, taking photos, videos, whatever they can. I think they would buy it on the spot if they could. So inevitably, could we get the Cybertruck launching in China? Probably on a smaller scale. I don't think there would be mass deliveries in China necessarily, and I think the literal vehicle itself would have to be a little bit smaller, which would actually cater to Europe as well. Europe also, they don't like big vehicles. Any European car company that you know of, they have small vehicles. But nonetheless, just a halo effect in China could be massive for Tesla's business. So I would imagine this is another reason that Tesla stock could be up 3% at the time of recording this video. Something else that is certainly helping Tesla also is 10-year treasury yields. 10-year treasury yields are down about 6.5 basis points today, down to 4.09%. We did not get much for economic data today, but we did get the Dallas Fed Manufacturing Index. This came in, well, really bad. Last month you were negative 10.4. The estimate was negative 23. We came in at negative 27.4, really hammering home the Fed should start cutting rates as soon as possible. Tomorrow, we are going to get some economic data coming out really overnight tonight, a lot of European data, and some important economic data for the US tomorrow morning, but we'll break down what that is, what the expectations are, and what my expectations are for this data in the next video. Fidelity has marked up the value of its shares in X Holdings by more than 11% during the month of December, according to a new disclosure. So it appears as if Fidelity and potentially other firms think X is now more valuable than it was before. That is good news for Tesla stock investors, because if something were to go awry and go sideways for X, don't think for a second Elon would not sell more Tesla stock to make sure X succeeds. The value of X going higher likely means there's less of a chance we're going to see Elon selling shares of Tesla. Potentially, that even means X is either profitable or very close to being profitable, as X's CEO has already said. Overall, this is really good news for Tesla stock investors. Tesla stock today is seeing a fair bit of option activity. In the video that comes out at 8 p.m. tonight, we'll be able to see the entirety of the option story today in Tesla stock from hedge funds and institutions. It does update right at 4 p.m. This video comes out at 4 p.m., so unfortunately, we do not have the final numbers, but again, we'll get you those numbers by the next video. But so far, so good. You have seen 710 orders from hedge funds and institutions, totaling $181 million, with a positive order value of 55%. If you take a look at the entirety of the option activity today, including hedge funds, institutions, and retail investors, to the call side, volume was 52.28%, volume to the put side of 47.72%, open interest by this Friday, you have 57.53% to the call side and 42.47% to the put side, so also looking strong there as well. Short positions in Tesla currently stand at $14.78 billion, with 2.92% short interest of free float. It looks like potentially some of the short selling activity has died down a little bit. You are seeing cost to borrow max at about 2.3%. You are seeing 2.34 million shares that are being borrowed, presumably could be sold short, and about 677,000 shares that are being returned today. So about 1.66 million net shares being borrowed. You can think about this like it's dry powder to potentially short Tesla. It doesn't mean they have to. It doesn't mean 1.66 million shares are going to short Tesla. It just means there's a possibility that they could short Tesla. There's a good chance that tomorrow the data comes in good, Tesla stock rallies, and these shorts, they don't want to short Tesla anymore. The tide is changing, and they just return the shares that they borrowed. But we will obviously have to wait and see. Taking a look at StockTwit sentiment gauge, you are extremely bullish at 88. This is higher than yesterday's number of 78, which is great. Message volume is higher than yesterday as well. Yesterday you were at 18, which is categorized as extremely low. Today you're at 35, which is still low, but you're starting to see more activity starting to pick up in Tesla, and it looks like the participation ratio is also increasing. Now, the participation ratio measures the number of unique accounts posting on a stream relative to the number of total messages on that stream. So it means instead of maybe one person posting 10 posts, right? 10 messages on StockTwits about Tesla, maybe you're getting 10 people posting one message a piece, or 5 people posting 2 messages a piece. Participation ratio at 60 is categorized as high. The higher, the better for Tesla stock. If you want to see Tesla stock continue higher, you want to see all of these gauges, ultimately get into the high or extremely bullish readings, especially considering right now, not a lot of people are very bullish on Tesla stock, when in all reality, this would be precisely the time you would want to be bullish. Remember, buy low, sell high, not buy high, sell low. I mean, for gosh sakes, the RSI, even considering Tesla stock has rallied about 0.5% since we've even been recording this video, the RSI is still only at 25.36. The RSI could easily reset back to 40 or 50 over the next coming days. That would be quite a bit of continued upside from here. But this week in Tesla stock, minus tomorrow's insurance registration numbers, Tesla stock's probably going to move based on what the markets do. So 3 big themes of this week: economic data, and we have economic data basically every single day, but your big data will be on Friday. So that's one component of this week. You have the Fed on Wednesday. That's a very big component of this week, and I personally think you may get an end to quantitative tightening, or maybe a big reduction in quantitative tightening, which could lead to treasury yields falling sharply. So that's number 2. We'll talk about that more once we get closer to Wednesday. Number 3 is earnings. And earnings, I think, are a big wild card. I think it's safe to say the economic data this week is probably going to come in so-so, probably in line with estimates. The Fed's probably going to be pretty dang bullish, in my opinion. Earnings, I have no freaking idea. I think it's going to be a mixed bag across the board. Question is, do your big tech names have good earnings or not? Because big tech controls the indexes. If the indexes fall, well, everything tends to fall. Here on the day today, you don't have too many big earnings today in after hours. You do have notable names like F5, Whirlpool, Cleveland Cliffs, Nucor, Supermicro. Supermicro is the largest stock in the Russell 2000, which is IWM. If you guys trade IWM, like I have, if you're in the trading community, we've talked about Supermicro extensively over there, but that stock's up 70% in January alone. If you get bad guidance, I want to say bad guidance because it's probably going to be good guidance, but maybe not as good as the markets are currently expecting given the massive rally that we have just seen with this name. To get a sell-off here would likely spark a larger sell-off in small cap stocks in general. On the bright side, SoFi had really good earnings. They swung to profitability when the markets were not expecting it. They actually issued 2026 guidance as well for the first time. They really went extended out here for the next 2 years, which most firms are saying, hey, that's a good sign that SoFi thinks their growth will continue for a while. This is what is really boosting your small and mid cap stocks today. Other stocks like a Tesla, I'm sure, are benefiting from stronger than expected results from even something like a SoFi. Wall Street kind of groups the same stocks together. Tesla, SoFi, Fubo, Palantir, all of these different names, and they can have sympathy effects based on what the other one says or does. Tomorrow morning, we are going to get Pfizer, GM, UPS, JetBlue, AC Smith, Marathon, MSCI, Corning, HCA Healthcare, and the Pulte Group. The big one for Tesla specifically being GM. If GM has some really bad things to say about EVs or the EV market or consumers or demand, well, obviously that's probably not going to benefit Tesla stock, but I don't think it's actually going to hurt Tesla stock as well. I think the markets fully understand GM, Tesla, they're in totally different fields. As far as where they are actually at in their evolution, Tesla is so far past GM, it's kind of ridiculous. There's ultimately no catching up to Tesla, at least for a very long time. The other big story of this week will be Microsoft and Google Tuesday in after hours, and then Apple and Amazon and Meta Thursday in after hours. But today with Supermicro and AMD, that's really going to affect your chip sector, and that will ultimately affect Nvidia as well. Semiconductors and or AI have been major components of this market to start 2024. If the air comes out of that bubble per se, even just a little bit, that could cause a larger pullback in our markets. Mix that with maybe some not so great earnings from Microsoft or Amazon or Apple, and you could be in for a little bit of a problem. We'll have to wait and see, but it definitely looks like this week is going to be one of the most volatile weeks that we have in store for all of 2024. Global inventory numbers for the Tesla lineup show a continued drop off in inventory for the Model Y, which is great news because you hit a high of about 9,300. Now you're down to about 8,300. So you're down about 1,000 vehicles in inventory, which this is still very high amounts of inventory. You don't want to see inventory start to build up, or Tesla may consider cutting prices again. So that's never good, but maybe it's just due to some of the readings from Giga Shanghai. We do tend to see the first quarter really see a lot of shipments out of China to other markets like Europe and even to the rest of the world, right? Japan or South Korea, other markets like that. So maybe it's just a buildup of inventory reflected off of Shanghai. At least that's what I'm hoping for, because I tend to be optimistic. The Model X, the Model S, and the Model 3 all seeing really unchanged inventory numbers, kind of just trending sideways, which shows me that we're probably seeing some good demand, at least for these three models, and I would imagine for the Model Y as well. I don't think anything dramatically changed. The Model Y is still the best-selling vehicle in the world for 2023, but I think there's just some accounting issues that are taking place to show an elevated Model Y inventory count. Google Trends data for the Tesla lineup showing a slight deceleration across the board with all Tesla models. That's pretty common to start a new year. Not anything I'm really worrying about at this moment in time. The percentage of stocks above their 50-day moving average today up 0.31% to 65.5%. Again, you're still way off of your high of 86%, so this market continues to be top heavy. So what's going to happen this week, just so everyone's on the same page, or over the next couple of weeks, to get a continued bull market, if you will, you're either going to have to see the bottom half of the markets catch up to big tech, or you're going to see big tech come down and match what the average stock has been doing, in which only 65% of stocks are even above their 50-day moving average. So what, 35% of stocks are below their 50-day moving average? That's not great when the last 2 or 3 months have been so spectacular for our markets. Now, as I previously mentioned, based mostly off of 10-year treasuries falling, SoFi having better than expected earnings, interest rate sensitive stocks performing a little bit better today, the Russell 2000 is the top performing ETF for your main ones, right? Your Russell 2000 is up 0.67%, NASDAQ up over 0.5%, S&P up 0.25%, and the Dow is pretty much flat on the day today. But check it out, the VIX is actually up 3%. Now the VIX just basically measures S&P 500 option activity. So if you have more puts being bought on a given day, the VIX is going to go higher. More calls being bought, VIX is going to go lower. That's why the VIX tends to stay pretty low, because people tend to buy more calls than puts, generally speaking, on the markets. Now, seeing the VIX up today, 3%, a sizable amount, when the other indexes are also up, it's telling you that some people are fearful under the surface. The volatility is probably going to kick into our markets soon. Odds of a rate cut coming March 20th did increase a little bit today, about 1%, from 46.2% to 47.2% today, so exactly 1% of an increase, and you did see the odds of a pause drop about 1% as well. So a little bit greater odds today that we actually get a rate cut in March, but nothing that is truly sizable that is likely affecting our markets too much. You're still pricing in a pause coming March 20th with 51.4% odds, and the odds of a rate cut at 47.2%. But any good or bad data here, any comments from the Fed, they're going to change these probabilities, and I expect, well, these are going to move quite a bit coming on Wednesday when we actually hear from Jerome Powell. Markets are still pricing in 6 rate cuts for the entirety of 2024. The odds are actually going from 34% on Friday to 36.3% today, probably due to the drop in treasury yields that we are seeing. I would imagine this is having some kind of supportive factor in our markets today. I mean, generally speaking, people want to see more rate cuts as long as it is not saying we're going into a recession. The more rate cuts we get, presumably, the more of this money market money could come back into our markets, which currently sits at about $6.2 trillion. Just for a little bit of context here, the entire market cap of the Russell 2000 is about $2.3 trillion. So you could buy the Russell 2000 twice over, almost 3 times over, with just the amount of money sitting in money market funds, let alone bank accounts or other brokerage accounts. So let me tell you, if you are a bull in this market, well, that's probably the thing I'm most bullish about, is just the sheer amount of money on the sidelines that is not participating in stocks at all. Tesla stock is currently $189.14 per share. I continue to believe 180 was probably a short-term bottom unless the markets themselves do go through a bit of a sell-off. Even at this point, you would have to drop over 3%, 4 or 5% just to get back to the 180 low. So I think you'd have to see a pretty rough market to drop under 180. For whatever reason, if you did, 170 would be that gap fill level. That's where I would expect some support. If things got really bad, then you fall as low as about 150, but I think that would be really stretching it here. So bottom line is, I think you're at the bottom. If you're not at the bottom, then your downside is likely limited from here. As long as we don't get any crazy bad news or price cuts, I would be very hard-pressed to sit here and say with any degree of confidence that Tesla stock is going lower than 180. I think you really need to see Tesla-specific bad news, because even if the markets do fall, we've seen Tesla stock start to outperform just because it's fallen so much. I mean, the NASDAQ's up 0.5% today. Tesla's up 3.3%. You are 6 4x outperforming the NASDAQ today. I think investors realized they got way too far over their skis expecting the worst case scenario for Tesla. And as long as we don't get the worst case scenario, Tesla stock is likely significantly undervalued from here. I think the markets are also realizing as rates do go lower in the second half of 2024, markets are going to be pricing out about 12 months. So until mid-2025, if earnings improve, if pricing improves, if interest rates get better, we avoid a recession and rates fall, valuations should go higher, right? You should see Tesla trading at a higher PE multiple. Look at Adam Jonas. He expects Tesla could trade in the next 12 months at 170 times multiple. I mean, if that were to happen, Tesla stock is going way higher from here if Adam Jonas is correct. Regardless of that, even if we just avoid a recession and rates fall and affordability improves for Teslas, Tesla should do very well. Think about it like this. If rates fall, when rates fall, it's going to be cheaper to buy a Tesla. Tesla has two choices there. They can let consumers benefit from rates falling and let consumers get Teslas at low prices, the lowest, monthly cost in the history of buying a Tesla, or Tesla can raise prices at least a little bit and share that benefit from rates going lower with consumers. Maybe instead of, let's say, a Model 3 costing $600 a month right now, let's say the Fed does cut rates by 2% in 2024. Let's say your payment would be $400. Well, Tesla could raise prices a little bit and say now your payment's $500, but Tesla really just raised prices, so they're keeping some for themselves as well, which that would ultimately help out EPS quite a bit. Now, we have a lot to go over in the next video coming out at 8 p.m. today. You definitely do not want to miss that one. In the meantime, hit the like button as well as subscribe to the channel. Let me know what you think about this information down below in the comment section. If you guys want to come trade with us live in real time, every time I make a trade, I post an alert. We have a specific set of earning strategies that we like to employ that offer potential large returns with less risk than maybe you'd otherwise see in like a YOLO kind of strategy. So I think a lot of you guys could benefit from that. If you guys want to come try it out, come join us, come learn at the very least, check out the link down below in the description of this video. And again, I do apologize for the kids in the background sometimes. Well, actually, forget that. I don't apologize because they're kids and I can't apologize for that. But he's 8 months, he's teething. My 4-year-old is a daddy's girl. I'm a single parent, single dad doing this thing myself. It's hard enough on me. I get it. It's tough to listen to as well. Little voices here and there, cries or whatnot. Yeah, it takes a toll on me. Days are hard. This is not easy putting this information together. It's not easy just doing this by myself. So appreciate those of you guys that do have the patience and get value out of the videos that are provided, even though you might hear a cry or two throughout them. I do appreciate those of you guys that come be a part of this action with us. So nonetheless, thank you guys for watching. I just wanted to kind of put that out there. I know some of you guys complain, some of you guys don't mind, but thank you. You guys enjoy the rest of your day, and I will see you in the next one.